Good morning, everyone. Welcome back. All right, so starting the week on a down note, and this could be a classic bull trap that was set up on Friday. Good morning, good morning. You know, markets gapped up on Friday, a relatively large amount. Doesn't really look like such a big deal on the daily chart, but the size moves that have been happening lately are pretty big, as you know. So there was that gap up. Oh yes, got to show the screen. I like to see Dan and myself, but the charts are better after the initial viewing. Okay, thank you for that. So it was Friday. The gap up right up into the resistance, and I marked the top of that bar since it was the positive close. So these red bars were closing down here. Obviously, that's why they're red. But so that was the closing price and why I picked that spot. And so resistance and support are always areas. So I figured it was somewhere in this area. You had this unfilled gap here, and who knows, maybe it could go up to the 200. As I always say, and during pre-market, what bars look like now doesn't mean they're going to look like this at the end of the day. So if this bar was to turn into a bottoming tail bar, all we would have is a gap up and some consolidation, after this consolidation. As the markets moved up, they went sideways at resistance, which is bullish. And then we got the gap up on Friday. There was the dip, and then, things, buyers showed up to the rescue a little after 3 o'clock and rallied things back up to the high of the day, which looks super bullish in front of the weekend. It's like, okay, this thing is set up to take out the high probably on Monday. Any minor gap down would probably be bought, looking for it to push higher yet. But here we are opening down, and we'll look at the spiders to get a better view of from the day chart perspective, 9:30 to 4 o'clock. Here we are down at the low. So you got a bar, if we look at the day chart, that rallied back up to the high. And now, we still got time to the open, but opening at or below that bullish bar's close, clearly bearish. So the question becomes, can it actually survive? Can the buyers show up to the rescue yet again and rally this back up? I guess we're going to have to see. But the further it moves down into this congestion area, well, the greater the probability that at a minimum, this is going to go sideways, continue the sideways price action. But once it breaks here, right, if it should do that, you've got this longer consolidation down here. You got a little bit of support on these bottoming tails right there. But once it breaks this, the odds of this holding are relatively small. And then we look for some kind of pullback. We then go into, let's just call our factory work and say, okay, here's minor support where this was the congestion. But, so if we look at the intraday charts, this is going to be the support area right here and the rising 20 MA. So as of for today, our view is, well, what does it do by the end of the day? Right now, looking at the 60-minute charts, you've got a break, you got a sideways consolidation and a break. And so while it could, find support at one of these subjective reference points over here, it does open up the door to coming back down to the bottom of the base. So as always, we assess what's going on, right, that we can see in the moment, and then see if we want to find do we find trading opportunities based on these patterns? And as what's going on here in the futures market and, the equity indices isn't necessarily what's going on in individual stocks. So this is a starting point to say, well, our approach is a top-down one. Let's see what, the top of the funnel, so to speak, is doing, because that's what's going to affect a lot of movement in individual stocks, not all of them. But we'll see. This is starting off bearish, and it's got room to drop. And it's also got room to go up if it could survive because of the way it came down. The weekly chart is right where it should be to form a reversal within a downtrend. right? As big as this move up was, it was a lot bigger coming down, and it sliced through support like it wasn't there. So technically, the pattern is set up for a reversal here. And we know this all came down because of the virus, not an economic turn down. So certainly different this time. Nike didn't trigger exit. Dan will get to open positions or gaps. All right, Qs. Been showing relative strength, came to the top of its resistance area. No doubt an impressive rally, certainly more impressive than the S&P 500. Nonetheless, into where the heavy lifting is, it's moving lower. Doesn't look like a big deal on the daily chart, right? But, it's a pretty sizable gap down. It's got support. And you can see right here, there's where the support was, this first level of support where it's stabilizing. And we say, just look to the left. You don't need fib lines, trend lines, Gann lines, Elliott waves, so on and so forth. Just look to the left and see where the buyers were before. That bottoming tail bar, that was a breakdown failure and it popped back up again. Gives you a reference point where they're going to show up again. And we'll see what they can do, if anything. And so that what showed relative strength is a starting point for analysis. So you can have something that showed relative strength, like what is it? PLT, is that the one? Come on, if I can type. Is it this one? No. You can have something that shows relative strength like this, meaning it went vertical, leaving very little to no support below, versus something that showed relative strength like this, that consolidated, went up, consolidated, went up, which leaves multiple areas of support below to deal with as a pullback starts. So a little something to consider when your bias begins to shift, right, from long to possibly short, if this is actually the bull trap setup where a larger correction will start from. YM, similar to the S&Ps, right? Very similar actually. The gap up above the consolidation. So when you get a gap up above a consolidation, it's supposed to keep going. Just, imagine like, oh, you just ran a race, right? You got to sit down for a while, had a nice cool drink, you're ready to run again, and you come out of the blocks and you're slammed to the floor, like no energy. Something's wrong. Right? So same thing here, break, little minor support. In reality, there's nothing here, but when, the other markets like the Qs being at support, if it rallies up, can support the Dow, but in reality, there's nothing here. So we've got an opportunity here to see if things actually can stay weak this morning, and shorting opportunities in these equity futures. And the Dow looks like one of the best ones to do it. It was showing relative weakness, and it's just to the bottom of the base, but that's a big move intraday, which we'll look to do. Russell, right? And this weird, I'm saying weird because it's been showing relative weakness and strength. It showed strength here by not breaking down to a lower low. It actually went sideways. If you can compare that to, the S&Ps. And so now it showed relative weakness. It didn't get above the highs like the other. It looks more like a bull flag within a downtrend. So this could drop too. It would be interesting to see. I'm going to be interested. I watch them all during the day, but if everything's weak, odds are this is going to come down, into this area as well. So if it does come down here, well, that's the support level, right there. That should be it. I don't have that lined up there. Yeah, the bottoming tail right there, where buyers will show up again, and then we'll assess what happens at that point. All right. As you all know, crude oil is getting shellacked here. Many are asking why the forward contracts are not falling like this. I honestly don't know. A lot of opinions. I guess one would be that you know, the view is further out. It's not as bad as it is on the current month, but we'll see. Clearly, this is a crushing move to the downside. You can see where this was, you know, way back here in 2008, big rally, drop, and now it's blowing through this support. It tried to hold the $20 level there for a while, and now it's broken. So, hey, I'm looking forward to dollar a gallon high test in the near future. That's what should happen, I think. But we'll see. They must have quite an oversupply of gasoline in those tanks out there with everybody stuck at home. All right, bonds are they're up here, but really flat. You know, sideways. They held the support coming into resistance, so I wouldn't expect much. But if the markets drop, odds are, you know, this does push back up as money flows into bonds and out of equities. Gold coming down here a little bit toward that major support level. This is an uptrend, but really we don't like to see, you know, breakouts like this come all the way back. So this probably going to consolidate for a while, I think. You know, the weekly, this is into some long-term resistance here between 18,000 and 2,000. So I think some kind of correction here is a buying opportunity. You just have to see how much it corrects. Silver rolling over here a little bit as well. Got a sell setup on the weekly there. Silver's been showing weakness, and got the transports here, which I guess is going to be going down. Right, we got airlines here, you know, dropping. They haven't been able to participate so very much, other than stabilization during the market rally. And you know, so they're down a bit here, and looks like they could go lower if the market really does start to come back in. And maybe gas, the lower price of gas, you don't know, you try to figure this stuff out, you know, looking at different intermarket relationships. The low price of gas helps airlines, but how can you help the airlines if they can't even get the planes off the ground? But I guess intermediate term, that is a positive once they start flying again. Right? Yes, Paul, let's look at SPX. Let's go back to the futures here. And I said, we've got this reversal here. So if we can find premium above 2,900, I think that's a no-brainer. You know, as much as you can say, use the words no-brainer in this market, because to some extent, it has no brains. It's just reacting to news day to day. And the downside, I think we want to stay away from unless we see a move down here, which will explode the premiums in the put side. And then that could be the focus as it comes into support to sell a put spread down below here. All right. So I'm not interested in put spreads when there's a void below in a weak market. Focus on the call spreads to start. And I think that is it from myself. I know I did that a little quick, but Dan can review open positions and take questions. All right. All yours, Dan. I looked at gold and silver, Trader Joe. I'll just take a quick peek. We talked about this deeper correction from the breakout area. This is at resistance. And so probably deeper pullback, but I think it's viable on a pullback, and silver has been the weaker, and it's got a sell set up here on the weekly. So if you're interested in shorting, probably silver is the better one, but it's at a little support there. Go ahead, Dan.
All right, good morning. Yeah, on this oil, what I don't understand is, yeah, you know, tomorrow's the expiration and people don't want this oil. What the heck are they going to do with it? They're what a futures contract is an agreement to buy or sell. So one party has to buy it and the other party has to deliver it, has to sell it. That's what a futures contract is. It's not like an option where you have the right but not the obligation. Right. So, I mean, think about it. What you can go buy crude today at $11.40 a barrel. Now what? What are you going to do with it?
Maybe airlines with cash are going to store it.
Right, but they have nowhere to store it. Right. But the part I don't understand is how are the future months selling at whatever they're selling at. Here, I'll look it up.
Considerably higher.
No, right. So that is my question.
You'll have to ask Kramer.
Well, I just don't understand. I mean, I understand what a futures contract is. I understand what it is, you know, blah, blah. But I don't understand if they're at 1150 now, how 29 days from now, the June expiration, is it trading right now at 2176? That's what I don't understand. How can the demand go from 1150 to today?
It's the belief that it's not going to stay cheap. So
No, I know, and that's why I'm scratching my head, is the magnitude. Alex, that's what and Alex, your drop down. Alex, that's what they're quoting all morning on CNBC of the one that is expiring. So that's where I'm getting it from. All right. So anyway, that's it. I've just never seen the magnitude of two contracts being that out of whack. All right. Opens in the weekly options trader. We're very light. We have 3 positions. We got a call spread on this Zoom, which unfortunately is showing relative strength here. I mean, I never would have shorted this pattern. That was a power move. We actually had it as a long a week ago out of this bullish turn, but we have a far out of the money call spread. IWM, we have a call spread, the 1 1.25 over last week's high, and finally Facebook. Hopefully that gap down will save us. We went to 185, 190. Zoom, we have the 162.5. So it's over this red bar. And that's how we sell call and put spreads. See the high here, 160, 169. So we have the short strike above that. So all it has to do is bobble around and, you know, stay below that by Friday. On the swinging options trader, we only have 4 open positions, which for us is very light. We have a bear put on debit spread in IWM. It was the weakest, as you saw when Greg reviewed. NVO, beautiful no-brainer gap breakout on Thursday. We sold a third into strength on Friday. Gapping up here, relative strength looks fantastic. MJ. This is actually Gustav's favorite day of the year, and let me tell you why. Just for those of you, this is 420 day. Gustav is 420 friendly, and so our MJ marijuana ETF on Hippie Hill. Yeah, it's pot day. All right, this was up. Wow, it was up. I can't tell. Looks like it's flat now. So anyway, we're long stock on that. And Tilray, we have a covered call, another marijuana stock. And that is it in our opens. We mentioned in the advisory letters, we had 100% long bias, but we made it very clear. We said, look, we have 1 foot out the door, that we could get a bearish gap on Monday today to change our bias. We said, hey, the next bear gap could get, have some follow through. This Wednesday on MT Live, we are talking about trading gaps in this bear market and earnings season. And, there's been crazy gaps here. I mean, Dow up 700 points on Friday. So that's what messed up some of our call spreads. Let's see, YouTube. Yeah, if you're still in Nike, then you're fine. Somebody on YouTube saying his Nike didn't trigger. I got another email saying his didn't trigger. You know what? Maybe that was a bad print then on Nike, because I've had a few people say we had a 30-minute high stop on Nike, and you know, when I do trade review, it was a great setup. You know, it was this gap down right there. No, I'm sorry, we did it on this day. Look, gapping under that green bar, leaving all this as resistance, and then boom, Friday. See, the 30-minute high was 90.22, and then it, you know, according to this chart, it did hit 90.25. So I don't know the reason. All right, let's keep going. Oliver on YouTube saying it has STH to do with the contango so far. I know. If you're talking about, Oliver, if you're talking about the oil discussion, yeah, contango, just keep it simple. Contango means that future months are more expensive than current ones, but that usually creates a drag. Backwardation is what gives you the tailwinds. Excel here, this is a beautiful gap breakout on Friday. I don't know how we missed that. In a beautiful 15-minute chart. Wow. That, you know, that would have been one that I would have had no problem holding long over the weekend because the markets were strong. This late day breakout, now gapping up again, but for us as a new trade, nothing to do. I mentioned cake. It's a, you know, sloppy bottoming pattern with the beat up restaurants. Gapping up to 20 bucks. It was gapping more earlier. You know, retracing 50%. It's, you know, keep an eye on it for 30-minute high. This RRGB, another beat up restaurant stock I'm watching. It's actually showing greater strength than cake because it has a higher high. It's above the 20. The weekly is a bull 1, 2, 3. Fro, yeah, I noticed a couple of these oil commodity shippers are doing well today. And I mean, just the only common sense reason is because they got more demand from people trying to store their commodities that they can't sell. This one though, this one's not bad. I also wrote down TNK. This one's sloppier. Let's go back to the gappers. DD had something to do with guidance. It's gapping up. USCR with guidance or earnings, gapping down. No great pattern. TFC up 34.50. Gapping up to resistance, another bottoming pattern. Do you think the oil shippers are storing it? Yes, absolutely, Brian. That's exactly what they're doing. The shippers are going to do whatever you hire them to do. If you want them to ship it, they'll ship it. But guess what? You need somebody to buy it if there's a need to ship it to them, right? Otherwise, yeah, I'm paying you to store it. And that's why futures pricing, there's always a component to storage costs. You better believe it. Storage and shipping costs. You don't, you know, because every futures contract, by the definition of what it is, you got to go to the CME website or wherever they whatever exchange they're trading on, and you got to read the product specs, and it'll tell you what you're buying or selling and what your obligations are, and the quantity of the tradable unit and where you got to deliver it. Let's see, MTB, I think at earnings, It's like trading range, but in a downtrend. Yeah, Jeff, they've been talking about, I heard something about that over the weekend, but they were saying that the Dems aren't letting them. Just the amount of just bickering in Washington is just makes me puke. 167, bearish gap here, but nothing to do with it. Kalu's a steel stock. Hey, Kalu's moving, or aluminum, I think. 77, that ain't bad. That's worth watching. Let's put old Kalu here. CBU, no pattern. Halliburton earnings gapping down 685. We actually had a couple oil stocks in our weekend letters, and it looks like everything's going to be invalid. And if anything does hit, then I'm fine with it hitting. Why? Because if they trigger in a weak market, then it's fine. Ba, that's strong. That's a possible breakout. Ahmad, VIAC. It's gapping down, bottoming pattern. I don't know. CNK cause. Yeah, CNK I liked over the high, Friday's high. You got your weekly climactic 2-bar reversal. Sure, CNK over the high. Let me put that. Yeah, I got it in the window. Alley had earnings, another similar bottoming pattern and a downtrend, but gapping down. The Sting, another oil we talked about. UAL had earnings, gapping down. Yeah, I mentioned I liked the cruise ships patterns better than airlines. They're showing more signs of possibly bottoming. Could it be a consolidation? We're ready to get another 50% haircut, of course, but we aren't going to enter unless it breaks out. So in this case, right here, I wanted to go over 12.98, but that's so close to $13. Then our entry's over 13. RCL, same. CCL has been more of a dog, although kind of similar right now, but it has to get over last week's high. I know, gee, you say that as a joke, but I mean, think about it. Things that of our daily life that are just normal. You're right. What do you do if you need a haircut? You either got to give yourself a little trim, or if no, I'm not. I know. I'm not joking either. Or you got to have your girlfriend do it or something. You got to adapt. All right, shop here. Greg mentioned. Wow, what a move off this prior low. But that's still strength. NBY gapping up $1.75. I don't know if this is Corona related. Oh, wow. All right, that was not necessary. Oh, I got my new computer set up. 6 monitors, Falcon, like Greg bought me for my birthday. All right, so this one, it's a big old gap, but nothing to do with it. Eros, double bottom on the monthly, but nothing to do with it here. RLGY, another bottoming pattern, but if it can get even over Friday's high, you got a big price void. IRTC had a nice bar on Friday, but extended on the 15-minute. NOW over Friday's high. Well, Sunil, it's not till November, but I think Greg wanted me to have the computer early. All right, so if this were to close right here, then over Friday's high is beautiful. Because then you got a price void, you got 3 red bars ignored. Apple, it's sloppy, but also if it could get over Thursday's high, because we like those bars that CRM over Friday's high, I like. Disney, that's a small Bear Island reversal. So that's doing nothing. Boeing, I liked over Friday's high, and if it hits, it's still fine. So we'll leave it. I know some of you were looking at little Iggy on Friday. Cisco, another one, Friday's high. Starbucks, Friday's high. The little restaurant guy I mentioned. The old Shake Shack, Friday's high. I heard on the news, yeah, tick negative 1,300. I heard on the news this morning that Shack turned down the government loan. Oh, and I also read in the paper, Norwegian Cruise Line is looking for funding. You know, they hired some people.
And I heard they turned it down because I think people were yelling that they don't need it. They got embarrassed.
How can they say that they don't need it?
I guess people see they're selling a lot of whatever they sell, and why are
Shack
they asking for money?
burgers.
Yeah, takeouts are doing great.
All right, this thing was on fire on Friday. Devin had a nice day Friday, but these oils are, actually APA, if it can still take out Friday's high, looks good. Same MRO, I doubt they're going to do it, but if they do, BKR, oh, that's a bearish gap under all of that consolidation. That looks lower now. But yeah, the cruise ship. Well, I think Carnival was the first one, right? Was it the Russians or somebody invested in them? And so, the cockroach story, right? You see one cockroach and you go looking around in the same industry. So when you hear that Saudis, when you hear that CCL is going to invest in one, the immediate thought is, oh, okay, then that's going to happen with the other two. And so which makes sense, if you're direct competitors, if you have the same market forces. So now Norwegian is saying they're looking for money. When I was watching the beat up casinos, that looks great. Over Friday's high, looks great.